would like to introduce to you our speaker for today. He is a part-time lecturer in the Ateneo de Manila University for microfinance and entrepreneurship for sustainable development. He is also the president and CEO of Social Enterprise Development Partnerships Incorporated that offers capacity building and financing services with the end goal of benefiting low-income earners, namely the agricultural sector, and empowering the poor. With thousands of subscribers on his social media platforms, he helped the normal Filipino citizen get access to information about investments, insurance, and financing while explaining them in terms that anyone can easily understand. A profound teacher to all, let us welcome our first speaker, Mr. Vincent Rapisura. As Mr. Vincent enters the call, kindly keep in mind that you can type in your questions in the comment sections down below so that our speaker can answer them after his talk.
Hi, hello Angela, and hello Anne, and thank you for having me in your event.
Hello, Sir Vince. Welcome,
Hello,
Sir
Mr.
Vince. Thank you for
Rapisura.
accepting our invitation. I know that we are all excited to learn from you today, so take it away, sir.
Yeah, okay. So thank you very much. Today I'll be talking about the state of microfinance here in the Philippines, and ayun, no, just to give my followers also why I'm speaking in English right now because this is an event of the Ateneo de Manila University's JFEL organization. Naimbitahan po tayo na mag-talk sa kanila kaya po ako ay mag-i-English muna ngayon. Okay? So, yan. So, through the microfinance lens, a talk on microfinance, I'm very pleased to be part of this talk. And of course, very excited to be joined by our esteemed guest later, Mr. Kamrul Tarafder. Okay, so what's the state of microfinance here in the Philippines? So before I go into that, I'd like to provide first a background of what microfinance is, because maybe not a lot of you would understand what microfinance is, no? So microfinance is a provision of a broad range of financial services, such as deposits, loans, payment services, money transfers, and insurance products. So this used to be just a microcredit program when it started, where loans is the main focus of the financial service delivery. Pero right now, what we are doing in microfinance is we've really broadened our scope in delivering financial services to the poor because we think that financial services, the whole gamut of it, especially savings and insurance, are very much needed by low-income households. So the target of microfinance are really the poor and low-income households. In our definition, in SEDPI, our organization, if a family earns less than 240,000 pesos a year or below the minimum wage, they are considered low-income households. And these families and households comprise about close to 80% of the entire households here in the Philippines. So the main purpose of microfinance is that the funds that they get out of their loans or capital will be used to run their micro enterprises and small businesses. When we say micro enterprises in the Philippine sector, we mean those businesses that have assets less than 3 million pesos. But you know, this asset size is still very, very huge and very sizable. And so in SEDPI, we also have a definition for the ultra microfinance, which we term as nano micro enterprises. These are about 8 million nano enterprises all over the Philippines out of the 9 million total enterprises here in the Philippines. So they make up the bulk of our entrepreneurial activity. However, they are the most vulnerable and they are very, very small in size. On average, most of them would have a loan size of about 20,000 pesos only. And the microfinance is used to enable our low-income households to raise their income levels and improve their living standards. Through the loans and capital that they are going to access, they would be able to use this in their livelihoods and create income for their families. They can also save and get insurance to protect them for emergencies and any untoward incidents, and also to plan for their future. So this is the market segmentation of microfinance based on regulation, because it depends on which particular government agency you talk to, and there would be a different definition of a micro enterprise segment. When you talk to the Bangko Sentral ng Pilipinas, banks consider microfinance as those clients that have loans less than 300,000 pesos. So that's how they define it. So below 300,000 pesos, you are, in terms of business loans, you are considered a microfinance client. For non-government organizations, this is based on the Securities and Exchange Commission's guidance or law for microfinance NGOs. If you have business loans or micro-enterprise loans less than 150,000 pesos, then you are classified as a microfinance client. In terms of housing, so when you talk to Pag-ibig Fund, the Home Mutual Development Fund, a government agency that's in charge of providing opportunities for housing to low-income households or for the entire Filipinos, and they would say that if you have a loan, a housing loan, less than 540,000 pesos, then you are considered a microfinance client. So you see, if you take a look at these definitions, anything below 540,000 pesos in terms of loans would be classified as a microfinance client, which is very important to emphasize because most, I think, Ateneo students would have parents who are entrepreneurs and they're accessing loans in the millions from commercial banks. So definitely your parents are not microfinance clients, okay? So this is just a brief history of microfinance here in the Philippines. So provision of credit started in the 1960s, but this was primarily supply-led and coming from rural banks and cooperatives to fund agricultural activities. In the 1970s, but this program in the 1960s have experienced low repayment rates because the needs of the poor were not put first. This story continued in the 1970s, and subsidized credit from the government even fueled this credit growth from the 1960s. And this was discontinued because of high arrears or delinquency from the borrowers because of faulty financial product design. So don't take it to mean that low-income households do not or cannot repay their loans. It's a matter of how you're able to design the financial products, your loan products particularly, so that the poor would be able to repay their loans, and you design the financial products according to their preferences. This in the 1970s, there was also a huge corruption from the government. We can all remember. Sorry, it's my time. In the 1970s, this was where Maginhawa 99 happened, which is an agricultural credit program by the Marcos administration that accessed huge loans from outside and from the domestic market, released this to a lot of unprepared cooperatives or samahang nayon, they call that before. And these samahang nayons, everyone most faltered down. And this program was laden with a lot of corruption. That's why it was largely unsuccessful. So in the 1960s and 1970s, it was the government who was ahead in terms of providing capital and credit to microfinance clients. In the 1980s, the private sector slowly came in, and there was adoption of Grameen group methodology and village banking models. So the Grameen banking methodology is primarily came from Grameen Bank, which is an institution in Bangladesh. And the one who established this is already a Nobel Peace laureate. And Grameen actually gathers women together, put them in groups or what they call as centers, and then they provide financial services to these low-income entrepreneurial women, specifically in rural areas. And this is the same story with village banking, which is popularized by FinTech, an NGO that's based in the Latin America. So this Grameen methodology and village banking were adopted here in the Philippines. And slowly it grew. And in the 1990s, what happened was a lot of microfinance institutions proliferated. And but most of these microfinance institutions are very, very small, which only have less than 3,000 clients. A very crucial feature or characteristic of the microfinance institutions in the 1990s is that although they are private led, the capitalization largely came from donations and grants, which means that the funding of the microfinance institution came from outside. In microfinance, what we want to happen is a sizable amount of the funds being turned over or being used for operations should come from the members themselves, as you will see later in our live case. In the 2000s, at the turn of the century, there was rapid growth of large microfinance institutions with focus on internal mobilization of savings and capital build-up. So after 40 years, starting from a government-led, supply-led credit facility, going to the private sector, but still donor-led, in the 2000s, in that decade, at the turn of the century, from 2000 to 2010, microfinance institutions realized that they have to fund their own financial sustainability. And the best way to do that is really to do internally mobilized savings, which means they have to mobilize a savings from the low-income households themselves and transform this. Just have that fiduciary responsibility to transform these savings into capital or loans that would be extended to the same low-income households. There's also the rise of what we call the mutual benefit associations, spearheaded by the Rimansi group. And mutual benefit associations are actually organizations that provide insurance services to low-income households, but for a non-profit strategy, unlike traditional insurance companies that would have the first intent is for profit. So this is it's similar to a cooperative, but they are operating under the insurance code of the Philippines, regulated by the Insurance Commission, and they are all membership owned, operating for nonprofit, which is actually, I think, the essence of insurance. In the 2010s, there's unprecedented growth of microfinance giants, and we are very lucky to have one, if not the biggest, microfinance giant here in the Philippines after my talk. So Asia Philippines, Card Bank, and Card MRI are the first microfinance giants here in the Philippines. We say they're microfinance giants because they have crossed the 1 million number of active borrowers or active clients. That's why they are termed as giants. So in the 2010s, unprecedented growth were experienced by the microfinance giants, but the large MFIs, those that have about 100,000 to less than 1 million clients or membership base, they experience some stall in their growth. Okay, here also, insurance has become, in this decade, insurance has become a standard of product offering. So when you operate a microfinance institution at this decade, you're already expected not just to provide a credit for our micro enterprises, but very crucially, you should also be offering savings services and insurance services. And insurance is particularly attractive because this lessens the vulnerability of the poor and protects them from a lot of natural calamities and hazards. Automation of microfinance operations also started in this decade. And that's why there's a lot of sophistication in terms of product service delivery, especially to those microfinance institutions that are already financially stable. And they're able to generate report real time so that they could respond to the needs of low-income households as it happens. In this decade also, the commercial banking sector entered the microfinance industry. I think this is a good development. In a way, because now the private capitalists, the big boys, are interested in the microfinance industry, and they see a lot of opportunity in it. And of course, for me, I see them as organizations that are primarily profit-led. That's why they went into microfinance. But at least having gone into microfinance, they couldn't escape the development impact of a microfinance, delivery of microfinance services. So even though they are profit-led, a lot of the microfinance players and the microfinance industry itself are influencing these commercial banks to adopt a more developmental approach, which means putting the preferences of the poor first and putting the welfare of the low-income households first before profit. And in this decade, the 2020 and beyond, there's influx of a lot of fintech platforms, the onset of digital platforms, and the popularity of social media enabled this. Although the Securities and Exchange Commission has already provided a lot of advisory and warning to these fintech platforms operating because they violate a lot of client protection principles, and they also charge exuberantly high interest rates. There's also a movement towards adoption and adaption of Islamic finance, which is particularly new, especially in the Philippine market. We've seen Card, one of the large, giant microfinance institutions, launch their Islamic finance program this year. And of course, ASA Philippines, the other microfinance giant, already has its own Islamic finance operations. But this is particularly important because Islamic finance was recognized even by Pope Francis and Pope Ratzinger as the way of financial service delivery that would solve a lot of global financial crisis or challenges that we are facing. So when you hear later the SEDPI microfinance principles, a lot of this are adopted, no, based on Islamic finance. It's based on Islamic faith, but it doesn't necessarily mean that you have to be a Muslim to be able to use Islamic finance. It's like eating French fries. You don't need to be French to eat French fries, right? So that's the same thing. Of course, there's also digital finance, the rise of cryptocurrencies and digital currencies coming from the central bank. And we hope that this digitalization of finance would really bridge the gap between the poor and the financial sector and not be counterproductive to widen the gap. Because as we all know, there's a lot of challenge in terms of bridging the gap between the rich and the financial services sector to access their services because of lack of capital and lack of infrastructure to be digitally included. Okay, I think this is a bit of interest, would be interesting to you. These are the top microfinance institutions in the Philippines as of last year. So microfinance institutions in the Philippines are primarily classified as rural banks cooperatives, microfinance NGOs, financing and lending companies. So this is the top 10 microfinance institutions in the Philippines 2019 with the number of based on the number of borrowers, and I juxtapose this with the with their total assets. So at the 10th place is a microfinance NGO, TSKI, with 200,000 borrowers. About the same number would be Moreco. This is a cooperative with and both will only have around 1 billion pesos in assets. Pag-asa Philippines have 309,000 clients. They are a microfinance NGO. Rapi Microfinance is also a microfinance NGO based in Cebu, which has heavy operations all over the Visayas region. So they have about 300,000 clients and both have 2 billion in assets. FICO, a cooperative based in Cagayan de Oro, operating primarily in Mindanao, also has about 344,000 clients with 13.1 billion in assets. The fifth one is Negros Women for Tomorrow. They have more than half a million of borrowers with 4.1 billion in assets. AIM Co-op, which is a cooperative in Aurora province, it has 652,000 borrowers with about 2 billion in assets. Card Bank has around 1.2 million borrowers with 18.3 billion in assets. Card Inc. also has 1.2 billion in borrowers and 12.7 billion in assets. And the largest single microfinance entity in the Philippines is Asia Philippines, which has 1.8 million borrowers with about 23.2 billion in assets. Just to put this into perspective, the largest commercial bank in the Philippines is Banco de Oro. And if we take a look at the number of borrowers of Banco de Oro, it only reaches about 500,000 enterprises here in the Philippines. And that's because the loan amount for enterprises for commercial banks usually starts at 1 million pesos and above. And that's the reason why they have low penetration and they provide low access to support micro enterprises. Okay, so that's what we have so far. So now I'd like to move on the principles of social microfinance. So the first principle that we have for social microfinance is that financial literacy should be a must for low-income households. And this is the reason why I was so excited when JFEL got in touch with me to talk about microfinance, because I think as an organization, a student organization focusing on financial literacy, it would be instrumental in achieving this goal. So there should be intensive savings mobilization, a focus on the importance of savings, no, for low-income households. It's really more teaching them how to save and providing the appropriate financial product designs that would reach them in terms of savings. There's also universal insurance coverage with PhilHealth. So we should educate them on how they could participate in this. Providing opportunities for investments, because there are very limited investments available for nano enterprises or micro enterprises. And the last one is to be free from oppressive loan products, especially interest-bearing loan products. The second principle is capital infusion to micro enterprises instead of loans. So in SEDPI, we are adopting a strategy to veer away from loans because we've found out that loans are actually oppressive and they trap the poor into debt burden all their life. And that is not a good thing. We should have more savings than loans, especially for the poor. And with this, we have to focus on the character development and also improving the cash flow of low-income households so that they can have access to capital, and also to have asset accumulation so that they have something to offer to their business partners through joint ventures. The third principle is profit sharing and risk sharing. So here we want to put focus on labor and participation above capitalism. We have seen how capitalism has destroyed the very fabric of how we do trade and commerce all over the world. Profit has become king, and labor has just been relegated into an input. But us being humans, especially for Athenians who put importance to humanity, labor and participation should be given more importance over profit or capitalism. And that means those who work more, who till the soil more, especially at the agricultural sector, should be provided and should be secured financially. So profit sharing and risk sharing should be agreed upon before commencement of any engagement. And with this profit sharing and risk sharing, we find solutions together to address risks, because we've broken the creditor-debtor relationship where the creditor is always at higher footing compared to debtors. The fourth principle is loss follows capital, where the party that provides larger capital absorbs more losses. We're always taught that those who have more responsibility and have more obligation to the community. For us, we believe that having resources is not just a matter of you having the right to enjoy these resources, but you having the primary responsibility and obligation to use these resources to help low-income households for the benefit of the community. So with this principle, there should be no foreclosures for the low-income households because we should provide a way for them to recover and prevent bankruptcy at all costs. The fifth principle is not for profit for insurance product because I've already discussed this. So this just means that protection for external events such as natural calamities and other man-made hazards should be done through solidarity and not for profit. So the cost of the insurance here is expense, and the surplus from the premiums we collect will be used as buffer or fund for any untoward event in the future. And the last one is principle is for partnership and cooperation, where we access government basic services for the poor. So I think I believe that the government should prioritize their services to be received at the lowest level of our society, at the bottom of the pyramid. Private and public sectors, and of course the civil society also, should work together to find solutions to improve the quality of life of the poor. Okay, we've done a quick research on COVID-19 impact for micro enterprises, and these were the impact we've seen. So there's loss of livelihood that led to loss of income. There's low access to government assistance, low demand on products and services, supply chain disruption, and lack of access to quality health services. So because of that, here are the challenges that we've identified. There's still high interest rate to clients because of high transaction costs and high loan losses due to disasters, especially during this time of pandemic. What's happening is that the external risk because of the pandemic, that cost is being passed on to the poor, and the low-income households are the ones shouldering that. And that's why we are encouraging and we are lobbying to the government that these costs should be absorbed by the state and not passed on to low-income households because it will increase their debt burden. There's also a huge challenge in terms of agricultural and rural microfinance, primarily because of frequent occurrence of natural disasters and the impact of climate change. It makes it risky for microfinance institutions to provide capital and loans to the agricultural sector. I think the government should play a very vital role in providing insurance against natural disasters and climate change. And of course, we've already seen the weak economy due to the pandemic. So to end this presentation, I'd like to present the opportunities we have identified in microfinance. So the challenges we've said about agri-financing and climate change is could actually be transformed into opportunities because microfinance clients have diversified needs, and we have already demonstrated that when we offer financial services that fit their preferences, they would be loyal and they would patronize the financial products that would lead to the sustainability of the microfinance industry. So there's also water, sanitation, and hygiene or WASH, and also education needs for the microfinance where financial services could be developed. There's also high government support for growth and capacity development of micro, small, and medium enterprises that we could bank on to bolster the growth of the microfinance industry. And lastly, also, the challenge is there for technology, but also this is an opportunity to be able to have more democratized access to financial services through digital finance. So that's my presentation. I hope you were able to learn from this. And I hope you would also take a look at microfinance institutions in your area and see how you would be able to support these institutions.
Thank you so much, Sir Vince, for such an enlightening talk on the different micro enterprise segments and different microfinance institutions and players that our viewers may be interested in. The importance of microfinance institutions that leads putting the welfare of our low-income earners first was clearly highlighted in your talk, which is an important factor for the development of our economy. I also loved how you highlighted the importance of financial literacy for everyone, particularly the low-income households because everyone has so much potential.
Me naman, Angela, I like how Sir gave us a historical overview of microfinance in the Philippines because it provides us with a broader view and understanding of this topic, as well as giving us more information about the economy during those periods and a different perspective regarding its state right now. And also, Sir mentioned a strategy called capital infusion instead of encouraging loans. And I think that's very important for our audience to take note of, as well as pursuing joint ventures as an alternative to building one's business. SEDPI's principles really are pro-poor and ensure that they have many opportunities for success.
So for those who may want to avail services for SEDPI, you may check out the ticker that is on the screen to find out how to do so.
Okay, thank you very much for your observations, and I hope that your JFL will take on this challenge to really take on financial literacy that not only targets your closed group within Ateneo, but go beyond the walls of Ateneo to be able to provide services to them.
Definitely, sir. So moving on, we will now go to our first Q&A session. So the audience, you guys can kindly send your questions to the comment section down below.
Yes, please do not be afraid to send in your. Oh, wow, that's very fast. We have our first question right now, Angela.
So Philip says, "Hi, Sir Vincent. How do microfinance institutions play a role in helping micro enterprises to become resilient, especially now during the pandemic?" Again, Philip says, "Hi, Sir Vincent. How do microfinance institutions play a role in helping micro enterprises to become resilient, especially now during the pandemic?"
Yeah, so microfinance plays a crucial role for the resiliency of of the low-income households because it provides them a lifeline, so to speak, to be able to use capital in jump starting their livelihoods again, in restarting their livelihoods again. With microfinance, they would also be able to access savings. No, if they're already microfinance clients, they have savings that would make them more resilient because they would not be dependent on government or charitable institutions when lockdowns happen. So they have savings that they can access to address this. And of course, the insurance products of microfinance institutions also provide the necessary cushion, financial cushion at the extreme event that somebody would die from the family because of COVID-19. With the insurance protection, then they would have at least some form of a compensation to be able to become more resilient. And of course, the other payment services that are being offered in the microfinance sector also plays a big role because it enables low-income households to trade beyond their borders, and that creates opportunity to them that makes micro enterprises more resilient.
Love that, sir. I think, sir, we have our second question already. So Angela says, "How can we convince low-income households to refrain from getting loans if they see loans as the only option to help them provide their daily needs?"
Yes. No, I believe that loans also play a crucial role in development. It's the financial product, oppressive financial product designs that need to stop. So for me, it's good to start with loans when you are starting your business, but start with a low amount, an amount that you can only manage, and you can have the discipline or the capacity to pay. And then eventually you have to, from the income that you earn, you have to set aside savings, and you have to set aside something for investment or capital, so that in 10 years or 15 years, yes, that's how long we are talking about, you would this micro enterprise would be free from debt.
Thank you so much, sir.
Mhm.
So our third question. For nano and SMEs, When is the right time to ask for financial assistance? How to bridge financial gap during pandemic? Thanks.
Yeah. So access to government financial services is actually a matter of how prepared the government is in reaching the bottom of the pyramid. And unfortunately, what we have seen during the lockdowns that happened in April and May, it took weeks before these crucial cash transfers reach the micro enterprise sector. So there's a lot that need to be changed, and a lot of this involves strengthening our institutions and improving the systemic challenges or bureaucracies that we are experiencing. And one of the ways the government could address this is to ease the process of establishing identity for the low-income households. You'll be surprised because for you as Ateneans, you would have no problem having your passport or having your birth certificate or having your driver's license. But these identification documents are very difficult for the low-income households to access. And without that identity, they're not able to access government basic services. So access to government services begins with identity. And then after that, we have to make the services of the government more friendly and accessible to micro enterprises.
All right, so thank you for highlighting that. I think we're ready for our next question, please. All right. Oh, from Philip Ventigan again. A follow-up question. How do our micro enterprises perceive digital methodologies employed by FinTech and MFIs nowadays? Thank you.
Yeah. So it would depend on the age sector or age segment that you would interview, no, that you would get information from. So for those who are 45 years old and above, they're typically averse of the digital platforms for fintech. But for the younger sector, the younger segment, especially those who are 18 to 30 years old, they are already savvy on this, and they are some of them are already using this. So what we need to do is to educate the spectrum, not the whole spectrum, so that there's a wide use in terms of using digital platforms to access financial services. And there's also a responsibility from the government side to improve infrastructure so that even the low-income households would be able to access digital finance because they can afford to access internet connection, for example. And of course, at the private sector, it is very important that the banks, the cooperatives, the microfinance NGOs would adopt digital inclusion and digital financial services that fit the preferences of micro enterprises. So this means that there should be low or zero account opening for savings, and very affordable insurance premiums, and frequent repayments for capital and loans.
So thank you so much, sir, for that. So we have our next question from Arabella. Can out-of-school youth apply for financial services in SEDPI?
Yeah, it depends on where they are based, because our operations right now is only in Mindanao, in Agusan del Sur, Davao de Oro, and Surigao del Sur. So that's already a limitation. If this person is an out-of-school youth that will use the funding or the capital to establish or to run a micro enterprise, then they are definitely welcome to apply.
Thank you, sir, so much for that. I think we can only accommodate one last question.
Mm-hmm.
So here, our last question from Frances. What are the greatest challenges faced by your members during the pandemic? Currently during recovery?
Yeah, so I think the greatest challenge is the lockdowns. We're still experiencing this because there are localized lockdowns in some of the areas. And that means that they are limited in terms of their mobility. they could not open their livelihoods and micro enterprise operations, and that means that they have no source of income. So that poses it poses a very challenging situation both for the microfinance institution and the micro enterprise clients. There's also disruption in the supply chain, and the previous dynamics, no, of or the previous health of the local economy has not yet returned to normal. So all of these are affecting our micro enterprises. And the way that we're responding to these is to also know how they intend to bounce back. And we now establish strategies to support those restarting of livelihoods so that they can maintain their membership in SEDPI.
Thank you so, so much, sir, for that. I think that is all the time that we have for this portion of the event. Again, thank you very much, Mr. Rapisura.
Thanks for watching! Kung may kapamilya, kaibigan o kakilala kang tingin mo ay magiging interesado dito sa video, please share to them or tag them in the comments section. Siyempre, kung nagustuhan mo ang video, pusuan mo na ito. Subscribe ka na rin. As always, feel free to write your questions, comments, and opinions respectfully.